Good morning. Good morning and welcome.
Good morning, Professor.
Good morning, Professor.
How are we doing today?
Good.
Today we're going to talk about Chapter 4, which is Professional Ethics.
Chapter 4 or 5?
Chapter 4. Next week we'll talk about Chapter 5. Now let me just share my screen with you guys, and then we could okay, can you see my screen?
Yeah, I can see your screen.
Okay, let me make sure my recording is on, and I'll come back to share screen, okay? Okay, my recording is on. Okay, today we're going to talk about Chapter 4, which is Professional Ethics. When we talk about ethics, what do you understand ethics to mean? Anybody? You guys there?
By code of conduct?
Code of conduct. Anybody else?
The dilemmas of like moral responsibilities.
Moral responsibilities. Anybody else wants to chime in? So when we use the term ethics, or we said someone is ethical, we're talking about your conduct, your moral conduct, right? And when we talk about professional ethics, we talk about your moral conduct within the profession. And the profession we're talking about here are the certified public accounting profession. What are the ethical requirements of the accounting profession? And what are the minimum standards you should attain on your engagement? So the standards we're going to talk about today are the minimal level of performance that we should attain. But whenever you are in any engagement, you do not strive for the minimum, you strive for the maximum. You're in class, you don't strive to get a D, you try to get an A. If you fall short, you get a C or a B, right? But you'll be above the minimum standards required. Likewise, when we talk about professional ethics, we're talking about, somebody mentioned the code of conduct within the profession, but we're talking about the moral principles within the profession. Now, there are legal issues and there are ethical issues. And although a lot of times they run parallel, they are not the same. Something can be unethical, but yet it could be legal. That's not illegal, but it is unethical. So when we talk about ethical, we're not necessarily talking about legal, although most of the time when it's ethical, it is generally legal, the legal system built out of the moral ethics. So when we talk about ethics here, it will be a little different from legal. Some things may be legal but may not be ethical. And some things may be ethical but are not illegal, right? Or not legal. So let's dive in. What are some of the things we're going to talk about in this chapter? We'll distinguish ethical from unethical behavior in personal and professional contexts. And we'll try to segregate personal from professional. We'll resolve ethical dilemma using an ethical framework. We'll explain the importance of ethical conduct for the accounting profession. We'll describe the purpose and context of the ICPA Code of Professional Conduct. We'll understand the Sarbanes-Oxley Act and other SEC and PCAOB independence requirement, an additional factor that influence auditor independence. We'll apply the AICPA code rules and interpretation on independence and explain their importance. We'll understand the requirements of other rules under the AICPA code, and we're going to describe the enforcement mechanism for CPA conduct. Now, as a CPA, when you're serving your client, you try to do the right things. And you also try to do the things that are in the best interest of your client. You try to promote the good of the people that surround you. Every successful individual, and you can look around you or for the people who you think that are successful, there are generally three things that goes with success. One, good family relationships, whatever you define your family to be, good family relationships. Two, a good career, and it's not necessarily in the same order. The order may differ among people. A good career. And three, a good community of friends that support you. Right? Whatever you define your community to be. So as a professional, and I don't care whether you're accounting or what profession you're in, part of your responsibility is to uplift your community. Uplift your family, your friends, your neighbor, etc. And if we all strive to do that, we will have better communities for the growth of our children and the future. Likewise, as a CPA, you try to uplift your client. You try to make them better. Yes, part of the business is making money, but that should not be the things that you put up front. If you uplift your client and you are giving them value, if you're giving them real value, they will be your client for a long time. And the economics of it will dictate. If you give your client $100,000 of value and you're charging $10,000 for it, then that client would be very irrational not to keep you as their accountant. Businesses make these decisions when they feel that they're not getting value for their money. That's when they make changes. But any good business person, if you're having great value for your money, you will keep investing in that opportunity. Ethical from unethical behavior in personal and professional contexts. When we talk about ethical behavior, we are talking about moral principles within the context of the society that we are functioning in. What does that society that we are functioning in view as the appropriate action for us? Now, and it's important to stress the society we are functioning in. I'll give you some examples. If you're living in the United States, it is illegal and also immoral for a man to have more than one wife. It is illegal and immoral for a man to have more than one wife. But in certain society, that's perfectly okay. In certain parts of Africa, you could have more than one wife, especially if you're a king. In certain part of the Middle East, you're allowed to have more than one wife. It's legal and it's ethical there to do that. If you're Muslim, Muslims are allowed to have, I think, 7 or 8 wives. No, I'm not saying that the United States is better or those countries are better. Who am I to judge? But all I'm pointing out is that the ethical standard and the moral principles in one society can be differ from the moral principles and the laws of another society. Within the United States, even in the context of your college, within your college, we have about 40 different ethnic groups in your college. And although we all live in the United States, our ethical principles are slightly different from groups to groups. And I'll be speaking from, because I'm from the Caribbean, most of us that came from the Caribbean, and this may be true for most people that came from outside of the United States, do not see a problem with somebody being in the United States illegally, or what we call undocumented immigrant. However, the citizen of the United States and the government of the United States sees that as a problem. You should not be in the country illegally. You should either have a visa, a green card, or be a citizen. Right? So right with the United States, a different sector of the population, we see things differently. Because the moral principles that we grew up with are different from those of other society. So when we talk about moral principles or we talk about ethical behavior, we have ethical behavior in the personal sense, and we also have ethical behavior in the professional sense. If I'm practicing as a CPA, and we are required to be ethical, certain things that the layperson may seems to be okay may not be okay. Although I'm from the Caribbean, being a CPA, undocumented status should not be appropriate for me. Right? So ethics can be defined broadly as a set of moral principles or values. Each of us has such a set of values, and it depends on our background or upbringing, where we are living, what society we are functioning in. We may or may not have considered them explicitly. So the things I mentioned, we probably didn't think about them or consider them explicitly. Illustrative prescribed ethical principle. We would say someone is ethical if they have these 6 core values. And most ethical persons have these 6 core values. One is trustworthiness. You could trust them. You could rely on what they says. 2 is responsibility. You're a very responsible person. 3, caring. An ethical person will generally be very caring. 4, they're good citizens. They promote the society of which they belong. They uplift the community of which they are a part of. 5, fairness. It seems to be fair. And 6, respect. They have respect for themselves. They have respect for others. They have respect for the people around them. And if you want to gain respect from somebody, you have to first show them respect. Right? They're not going to just respect you because who you are. Need for ethics. Why do we need ethics? Think of this. In Jamaica, Queens, and not only in Jamaica, Queens, but everywhere in the United States, we have traffic lights. We have traffic signals. We have stop signs, stop lights, speed limits, etc. Why do we need all these things? Well, if we don't have speed limit and people speed, they could cause an accident. If we don't have stop sign or stop light and everybody tries to go, nobody goes nowhere. And every so often in New York City, you'll see that. On Liberty Avenue and the Van Wyck, everybody, the light changed and everybody tried to go and nobody goes anywhere. So for the traffic to flow in an orderly fashion, we need the stoplight, we need the stop sign, we need speed limit. Likewise, in society, for society to function in an orderly manner, we need ethics. Likewise, within the profession, within the CPA profession, for the profession to function in an orderly manner, we need ethics. So the need for ethics in society is sufficiently important that many common held ethical values are incorporated into law. So a lot of these values that we have are incorporated into laws, but not all of them are incorporated into laws. So not because it's legal mean that it's ethical. And not because it's ethical means that it's legal. Most things that are ethical are legal and vice versa, but not all. Why people act unethically? Well, there are two main reasons why people act unethically. Think of this. If you come from a part of Africa or a part of the Middle East where it's okay to have more than one wife, that's a habit. That's something you see as your value. If you come to the United States, you may continue having more than one wife. It may be illegal, but you don't see a problem with that. So people will act unethically because they belong to a society that thinks of things differently than the rest of society. So their value system may be different. They may not see nothing wrong with it. Or two, they choose to act selfishly. They know it is wrong, but they're going to do it anyway. Why do people steal? They know most people who steal know that it's wrong, but they are being selfish. They want to benefit. They don't care how it affects the other person. And that's why part of being ethical is being caring. Go back to the standard that we just looked at. Now here in the text, they give you an example of it. You could read through the example, but let's go to our second topic for today, resolving ethical dilemma using an ethical framework. So the two main reasons that people act ethical is one, they belong to a society that thinks of things differently. For example, a lot of people do not see a problem with cheating on their tax return. It's illegal, it's immoral, but they want to save on their tax return at whatever cost. And when you grow up to be CPAs and you get your license, and you start going into business for yourself, you're going to see clients that will come to you and says, hey, I don't want to pay that much taxes. I don't care. And every year I have clients that come to me and say, hey, I don't want to pay all this taxes. And I said, you know what? You're in the wrong place. I'm going to do whatever it is that I can do legally to save you taxes. And also, I will try to teach them proper ethical values. I'll try to teach them the consequences if you go down that route, what could happen. So that I could encourage them to do the right thing, whereby filing their tax return and obeying the laws. Now, there are legal loopholes that you could maneuver around the tax structure. That's not in the context of this course, and every CPA will do that. But they will not do the illegal things, the fraudulent stuff that some people wants to do on their tax return. So, resolving ethical dilemma. First of all, what is an ethical dilemma? So we have a moral dilemma. What is the moral dilemma? I gave an exam last week, and it was online. So a lot of you have a moral dilemma. Should I do the exam based on what I know, or should I consult with my friends and do some cooperative work? And I guess in this online environment, a lot of you will consult with your friends, you will consult with your textbook, etc., to get the right answer because you want to maximize your grade on the exam. Now, if I give the same exam in the classroom and I'm sitting up front here, a lot of you may not want to do the same thing. Why? Because the professor is there. You will get the chances of getting caught are highly likely. And if you get caught, you could either flunk the exam, you could get thrown out of school, etc., etc. So you're having an exam in class, you have this ethical dilemma. Should I do the exam based on what I know, and maybe I don't have a good grade? Or should I try to do cooperative work with my friends? Right? That's an ethical dilemma. What is an ethical dilemma? You have two choices of action, and each carry their consequences. So if you do the exam on your own, you don't get a good grade. That's the bad consequences. On the other hand, if you try to get a good grade, the chances are the professor may caught you cheating, and that has its own consequences. So when we talk about an ethical dilemma, we talk about the person have a decision to make on what is the appropriate course of action given the situation. They have more than one course of action, and they have to make that appropriate decision. Now, in auditing, you come across ethical dilemmas all the time. In life, we come across ethical dilemmas. Right? We have choices that we have to make, and each choice carry their own appropriate course of action. When you become a junior accountant, you're going to be on the audit, what we call a staff accountant, and a senior will be supervising you. And sometimes the senior there want to bring the job in under budget time. They may tell you, hey, let's work overtime and not report overtime so we look good on the job. Well, you have an ethical dilemma. If you do what the senior says, he will like you, but if you don't, he may think ill of you. If you do what he says, you're going to lose out on your overtime money because you're working for time that you're not getting paid. On the other hand, if you don't do what he said, he may not be your friend. He may not try to promote you within the firm. Now, if you ever come across that situation, the appropriate course of action for you, a lot of juniors see this, is no, I'm going to do what's right. Always stick to that. I'm going to do what I believe is right. Because think of this, if you work overtime and you don't put in your time, you come in to bring the job in, you look good, you bring the job in under budget, but next year the firm is going to bid on the same job and they're going to think, hey, this is what it cost me. We'll bid the same way. On the other hand, if the appropriate course of action is to say, for the senior to do is to work overtime, have you get paid for overtime, and explain to the partner why this job take more time than is needed. So that in the next year when they bid the job, they'll bid it at a higher cost. So in your career, you're going to face a lot of ethical dilemmas, and you have to be able to resolve these ethical dilemmas one way or the other. You want to resolve it in a way that is proper and appropriate, which we'll talk about shortly. Sometimes we rationalize our ethical or unethical behavior, like cheating on your tax return. People rationalize it and say, "Oh, everybody does it." Not because a lot of people does it makes it legal. And there are a lot of people that cheat on their tax return. Now with all the electronic system, a lot of things are being checked, and a lot of them run into problem. If it's legal, it's ethical. I point that out at the beginning. Not because it's legal means it's ethical, and not because it's ethical means that it's legal. Hmm. The likelihood of discovery and consequences. Well, a lot of people fall into this category. I'm going to do it if I think I'm not going to get caught. If I think I'm going to get caught, I wouldn't do it. Well, guess what? This is how a lot of frauds are committed because people think they're not going to get caught. And then they got sucked into this fraudulent way of life. It's something it's agreed that the more you do it, the more you want to do it. Until one day they get caught. If your chances of getting caught doing something is 1%, and you do it 100 times, that chance is not 1% anymore, right? Each time it adds up. And if you're engaged in fraud, once you get caught once, guess what happened? You end up on a nice vacation at an island called Rikers, not Jamaica. How do we resolve the ethical dilemma? In any dilemma situation you're in, the first thing to do is obtain the relevant facts. Not hearsay. What are the facts in the situation? Once you obtain all the facts, you will analyze the facts. You'll analyze the facts and identify the ethical issues surrounding these facts. You'll determine who is affected and how they're affected. You'll identify the alternatives available to the person who must resolve the dilemma and the likely consequences of each alternative. For example, should you cheat on your exam or not cheat on your exam? Each one has its consequences. Then you will decide the appropriate action. Now, why did I bring up cheating on your exam? We're talking about auditing. Well, the reason being, we're talking about ethics today. And an accountant, for you to be a successful accountant, you need to have good ethical values. Ethical values are like any skills that you learn. You don't become good overnight. You come good by practicing, by conditioning yourself to be that way. And it builds up over time. So being a student, you should practice from the classroom good ethical behaviors. Think of this. If you will cheat on an exam just to improve one grade, think of what you will do when you're in public practice. You know what? If I cheat on this job, I could gain $1 million. And I'm pretty sure that there are going to be times in your life, because there are several times in my life, I could gain millions of dollars if I do the wrong thing. And it will be even more tempting to do them. And all it takes is one bad one to get caught, and you're done with slammer. And as I'm speaking to you, I know of a couple of CPAs. One guy was 70 years of age, have two kids, one a lawyer, one is a doctor, have a lot of money. And I'm like, why did he have to do this? Because he thought he wasn't going to get caught. So not because you think you're not going to get caught, you should do it. You should try to develop good ethical values that you share with your family, your friends, and your society. And you try to uplift them in their ethical behaviors. Whenever I'm with my friends, and if they're thinking I think is out of whack, I try to show them reasoning of why they should think differently. And here they give you an example. A staff person has been informed that he will work hours without recording them. From policy prohibit this practice, another staff person has stated that this is a common practice in the firm, and they walk you through this example. Right? You should not do that. You're working overtime, you should get paid for it. And they go through the analysis. Okay. Explain the importance of ethical conduct for the accounting profession. And again, I give you a striking example just before I talk about this. Why it is important. You are dealing with clients. And these clients put a lot of trust in you based on that one-page audit report that we talked about in chapter 3. They're going to invest millions, creditors, debtors, etc. will invest millions, if not billions of dollars. Why? Because they trust what you say. And if the public doesn't trust what the accountant says anymore, guess what? There's no place for the audit profession because the audit profession is giving assurance. Right? So it is important in the accounting profession, especially the audit profession, that we maintain a high level of public confidence. Special need for ethical conduct in the profession. We are professionals. What do we mean to be a professional? What does it mean to be a professional accountant? We're not a bookkeeper. We are a CPA. And once we're a CPA, our conduct is different. Think of this. If you're walking up Jamaica Avenue and you saw me coming on the other side of the street, and you're walking with your friends, and I'm conducting myself very well, I look very professional, you're going to say, hey, that's my professor. You're going to be happy to associate yourself with your professor. On the other hand, if you're walking on the street with your friends on Jamaica Avenue, and I'm on the other side of the street and I'm drunk and I cannot stand straight, are you going to be proud to say, that's my professor? If your friends point that out, hey, is that your professor over there? You probably say, oh, no, I dropped that class. And that's why I dropped this class. I can't stand that. So when we are a professional, the conduct that is expected from us by society is different. It's different than the average layperson. And we should uphold that conduct. We should uphold that respectability that we earn in society for them to put us on this pedestal and call us a professional. Think of this. If you go to your butcher and you're buying meat, and if his hand is shaking a little when he cut, and he cut a little rough, you're not going to complain. It's just a piece of meat. I mean, you're not going to be more than an ounce off. But if you go to your brain surgeon and his hands is shaking like that, and he's cutting like that, are you going to be concerned? Of course, because a brain surgeon has to cut very precisely. Otherwise, it's a matter of life or death. So the precision of the cut you expect from a brain surgeon is much different than the precision you expect from a butcher. Likewise, society expects us as CPA to conduct ourselves in a much more higher ethical manner than the average layperson or the non-CPA. So professionals are expected to conduct themselves at a higher level than most other members of society. CPA firms are engaged and paid by the companies in the financial statement. But the primary benefits of the financial statement are the third-party users, the creditors, the banks, the stockholders. So we want to maintain those people confidence in that financial statement and the audit report that we are issuing. As CPAs, we are encouraged to conduct ourselves at a high level. This diagram, which is on page 84, points out why we are expected to conduct ourselves at this high level. Well, for one, we have the CPA exam, which we have to pass to become a CPA. And the CPA exam is set by the AICPA. It's a uniform CPA exam. So regardless where you're taking this exam, you're taking the same exam. Regardless of what state you're in, you're taking the same exam. The CPA exam proves to the public that we are competent at the time we took that exam. Then we have generally accepted auditing standards and interpretation. The generally accepted auditing standards that we talked about in chapter 1 and chapter 2. The generally accepted auditing standards, the 10 standards. Competence, independence, and due professional care comes under the general standards. Proper planning and supervision, understanding internal control, and sufficient competent evidence come under the standard of fieldwork. Financial statement prepared in accordance with GAAP. GAAP consistently applied from one period to the next. Adequate disclosure and expression of an opinion come under the standard of reporting. Then we have continuing education requirements. Every CPA is expected to do 40 hours of CPE every year to maintain the competence you had at the time you took the exam. Then we have legal liability. As a CPA, we can be sued for everything we got. Then we have the AICPA practice section. If you want to do SEC audits, you must be a member of the AICPA practice section. Then we have the Code of Professional Conduct, which we are going to talk about shortly. The PCAOB, the Public Company Accounting Oversight Board, and the SEC. The peer review, one firm reviewing the work of another. Quality control standards, which are standards implemented by the firms themselves, which we talked about in chapter 1 and 2. So we move to the next section, right into the Code of Professional Conduct. What is the Code of Professional Conduct? What does it say explicitly? What does it say implicitly? What are some of the moral values within the profession? The AICPA Code of Professional Conduct. The Code of Professional Conduct has 4 sections to it. The first one being the principles, which are the ideal ethical standards of conduct, and is basically philosophical in nature. These are the ideal, this is what an ideal accountant or ideal auditor should possess. Then we have the rule of conduct, the minimum standards of ethical conduct, stated as specific rules. The rules are enforceable. So think of this as parallel to the tax code. You have the principles under which the taxation system is designed. Then you have the Internal Revenue Code. The Internal Revenue Codes are the laws that are enforceable. The rules of conduct are the laws of the profession that are enforceable. Then we have interpretation. In the IRS section, we have interpretation of the code. Again, here in the accounting profession, we have interpretation of the rule of conduct. They explain what the rule of conduct meant. And lastly, we have ethical rulings, which are rulings based on a given set of factual circumstances. So if you have a question on a matter, you will write to the ICPA and they will give you a ruling on that particular situation. Like we have a letter ruling from the IRS. That will explain something, a given situation in the tax code. Ethical principles. What are the ethical principles? Well, one, there should be responsibility. Professionals should exercise sensitivity and moral judgment in all their activities. In accounting, we should have good moral judgment. How do we develop this good moral judgment? It doesn't come overnight. It's something we have to practice over a course of time. The public interest. Members should accept the obligation to act in a way that will serve and honor the public interest. We try to uplift the public. Integrity. We should perform all responsibility with the highest sense of integrity. For objectivity and independence, we should be very objective in what we're doing as an accountant. And if we're doing attestation work, we must be independent. We'll talk about independence a lot more shortly. Due care. When we talk about the code, when we talk about GAAPs require due professional care. The principles also require due care. Members should observe the professional standard and try to improve competence. And then number 6, the scope and nature of service. A member in public practice should observe the code of professional conduct. So we should observe the law at all times. Standard of conduct. Well, the code is the minimum level of conduct by a practitioner. The principles are the ideal level of conduct by a practitioner. We should think of the principle being A and the code being C or D. We should strive for A, not settle at C or D. Now, sometimes we will not attain A, but we will get a B or a C. I'm not going to spend too much attention on the International Standard Code of Ethics, but they give us that also. Item 5, the Sarbanes-Oakley Act and other SEC and PCAOB independence requirement, an additional factor that influence auditor independence. Now, generally, we do not talk too much in depth with SEC stuff, but here I want to spend some time because it's parallel what is done under the AICPA. Now, let's talk about this one word, independence. What do we mean by independence? Independence means that we are unbiased. One word to explain independence, you're unbiased. So as the auditor of the financial statement, we are required to be independent. We are required to be unbiased in our judgment. Why? Because the financial statements are prepared by management of the company, but it is mainly used by third parties who are benefiting from it. And we are giving an opinion. And for us to give a proper opinion, we need not to take sides. We need to be unbiased. We need to be independent. The AICP and IESBA codes of ethics both define independence as consisting of two components, independence of mind and independence in appearance. Both are equally important. What do you mean by independence in mind? In my class, I have no connection to any of you students in my class. I'm independent from each and every one of you. That's independence in mind, or what they call independence in fact. Independence in appearance means that I must also appear to the public as if I'm independent in mind or independent in fact. So I should not be buddy-buddy with any students. Think if we are in a classroom setting and every day I'm coming with in the classroom with a particular student and I leave with the student and I'm hanging out in the cafeteria with the student, it will look to the students, other students, that are not independent, that we got something going, that we have some sort of connection. So when we talk about independence in appearance to the public, we should not be reflecting ourselves as having some connection with our auditee clients, the clients that we are auditing. Now, this is the tightrope area to walk, because for us to get the business, we have to do some PR with the client. However, we do not want to do too much PR with the client that it appear to the public that we are friends and are part of their organization. We want to maintain that distinction. And it takes a bit of professionalism to conduct yourself appropriately. This is something you will develop by being in the situation, by conducting yourself. It's a fine line you're going to walk in your profession. Sarbanes-Oxley Act and SEC provisions addressing auditor independence. In 2003, we have Enron went out of business and WorkCom and a bunch of the tech companies went out of business. And the public, prior to 2003, and the public was looking at the SEC and the accounting profession, hey, what's going on here? The auditors are giving clean opinions, and yet these companies are going out of business. So the accounting profession have to come up with something to address the matter. And the SEC came out with what is called the Sarbanes-Oxley Act in 2003. And the Sarbanes-Oxley Act creates the PCAOB, the Public Company Accounting Oversight Board, that spells out how the auditor should conduct themselves. The Sarbanes-Oxley Act and revised SEC rules further restrict the type of non-audit service that can be provided by auditors. The PCAOB has also issued additional independence rule relating to provision for certain tax services. And they spell out, if you're doing audit services for a client, there are 9 services that you cannot perform if it's a public company. And they listed 9 services. You cannot be doing bookkeeping and accounting services if you're doing the audits for that public company. You cannot be designing their financial information system and implementing it. You cannot be involved in appraisal or valuation services for these public companies if you're doing the audit. If you're not doing the audit, you can involve, because all the big 4 accounting firms have departments that handle all of these issues. But that's for their non-audit client. For the audit client, they cannot be involved in these issues. You cannot be doing actuarial services. You cannot be involved with internal audit outsourcing. You cannot be involved with management of human resources functions. You cannot be a broker, dealer, or investment advisor or banking services. You cannot be a legal expert service unrelated to the audit. So you cannot provide legal expertise or any other service that PCAOB determined by regulation is impermissible. So the AICPA prohibits these 9 services. The AICPA also promotes the formation of audit committees to foster the accountant independence. The audit committee is made up of a group of outside directors, one of which must be a financial expert. And that audit committee interacts between management of the company and the auditor. Now, you don't see this in small companies. You see this on the very large companies like IBM and so on. The audit committee comprises of 3 to 5 independent directors. So they're directors of the company, but they're not engaged in management. All members on the audit committee must be independent. At least one audit committee member must be a financial expert. Now, in the old days when we were in accounting, you could leave the public accounting firm and go work for one of the clients. And most of us, when we make that move from public accounting to private, we end up with a client. The SEC, after 2003, established what is called a cooling off period. If you are working on the audit engagement of a client, you cannot take a job with that client until 1 year has passed. You cannot take a job in the key management or accounting position until 1 year passed, which is a cooling off position. They also established what is called partner rotation, meaning that every so often, the partner on the audit team have to rotate themselves out, and the new partner has to be responsible for the client. And that period is 5 years. Every 5 years, you have to have partner rotation. They also established rules on financial relationship when you're dealing with the client. The SEC rules prohibit ownership in audit client by those persons who can influence the audit. Now, the SEC are also the independence rule. You're not independent if your family is in working with the client in certain capacity. Think of this: if I'm doing the audit of the company and my wife is the controller, I cannot be dependent. Now, the AICPA codes and rules on independence. What are they? Rule 101. The rule on independence is the most important rule in the audit profession. Because if you're doing an audit or a review or any attestation work, you must be independent. Independent means that you are unbiased in regards to the company you're auditing or you're doing the attestation work for. Rule 101 read, a member in public practice shall be independent in the performance of professional service as required by standards promulgated by body designed by council. What does it mean? You have no financial interests in the client. You do not own any shares in the client. You do not have any direct financial interest. You do not have any indirect financial interest that is material. Right? You do not have any covered member, which is you, yourself, your spouse, your children, or your parents working for the client in a management capacity. There's no related financial interest issues. Related financial interest, your relatives, or if you're a former practitioner, or you and the client jointly held investment, you cannot be a director, officer, management, or employee of the company, nor your related relatives cannot be. And now when it comes to relatives, they talk about direct line relation. You, your siblings, your children, your grandchildren, maybe your parents. Litigation between CPA firms and client. A lawsuit or intent to start a lawsuit between a CPA firm and its client. The ability of the CPA firm and client to remain objective is questionable. So if the CPA firm is suing the client or the client is suing the CPA firm, you're not going to be independent. So if you're suing each other, you're in violation of Rule 101. Bookkeeping and other services. The SEC prohibit bookkeeping and 9 other services. The AICPA will allow, generally bookkeeping services is not allowed unless you meet 3 criteria. Okay, we'll talk about the 3 criteria shortly. The 3 criteria: 1, the client must accept full responsibility for the financial statement. 2, the CPA must not assume the role of employee or of management. And 3, the CPA must conform to auditing standards. If these criteria are met, you could provide bookkeeping services for non-public client. Now, already the ICPA spelled this out this way. As a practical matter, we do not do bookkeeping services and audit the same client. Because in a court of law, it will be held justifying yourself. The SEC and AICPA rule do not allow audit firms to provide bookkeeping services to public company audit client. Consulting and other non-audit services, well, we talk about the 9 of them, the other 8 that the SEC prohibit. If they're unpaid fees, the accountant can be deemed as not being independent. What are the other rules of conduct? How they are applicable? Rule 102, integrity and objectivity. At all times, regardless of what work we're doing, not only accounting services, but tax services or teaching my class, I have to act with integrity and be objective. I must follow the general standards. 202, I must comply with the standards. 203, when we're doing accounting work, we have to follow the accounting principles, which is generally accepted accounting principles. So those are pretty much straightforward. 102, 201, 202, 203. 301, confidential client information. When we are engaged to do the client work, regardless of what kind of work, not only audit, if we're doing the tax work, every information that we obtain from the client is considered confidential. And we should not share that with non-interested parties. It is extremely important that we maintain that confidence. A lot of times clients come to us because they trust us and they have confidence in us. I have clients tell me stories about their life that they didn't share with their spouse or their children. So it's important that I maintain that confidence that they placed in me. Do not share your work papers with anybody that is not a party to your dealings with the client. Sometimes the parent or the children or vice versa will want their father information or their parents information, or the father want the children. No, you do not give it to them unless the person whose the information belongs to give you permission to do so. So whenever you're sharing your client information, you want to make sure you get permission from the client. Now, going back years ago, I had a client in New York, but most of my dealings with the client was with him, the husband. All of a sudden, one summer, the wife called me and asked for a copy of the tax returns. And I sent it to her because they filed a joint return, belonged to both of them. All I deal with the husband, both the wife and the husband were my clients. When I sent it to her, she called me back and says, that's the wrong return. I want the return for the business. And I said to her, I cannot give you the business return because the business is owned by your husband, not by you. I'll give you the business return if your husband called me and tell me it's okay to do so. Now, that didn't happen. The reason she was asking for the business return was because they're going through a divorce. So I called the husband. And he said, no, don't give it to her. This is what's happening. He filled me in what's going on. And about a year later, I'm in court as an expert witness attesting to their divorce case. So sometimes as accountant, you're called upon to attest to the divorce case, or as an expert witness, or as a person with information. And you're getting paid for that, by the way. Other rules of conduct. Rule 302, contingent fees. Generally, we are not allowed to charge contingent fees. Our fees are going to be a fixed amount or based on an hourly rate. But we cannot tell the guy, hey, I'm going to do your tax return. My fee is going to be a percentage of your refund. That's a contingent fee. We're not allowed to do that. Or the fee is going to be if you get a clean opinion or not. Rule 501, acts discreditable to profession. If we break the law, the rules of the accounting profession, that's an act that's discreditable to the accounting profession. Rule 502, advertising and other forms of solicitation. As we can do whatever ad we want as long as it is not misleading. Rule 503, commissions and referral fees. We are not allowed to give commission or receive commission to refer clients. We're not allowed to pay referral fees to get clients. Rule 505, form of organization and name. As long as our organization form and our name is appropriate for the state we're dealing with. And we have, each state have their different rules on the form of organization for accounting profession. So we have to clear that with the respective state that we are practicing in. The rules that are applicable to New York may be different from the rules that are applicable to Florida. So if we're going to establish a CPA firm in Florida, we have to follow the rules of Florida. If we're going to establish a CPA firm in New York, we have to follow the rules of New York. And our final topic, describe the enforcement mechanism for CPA conduct. Well, the enforcement mechanism, we have the AICPA Professional Ethics Division that could sanction us if we are not appropriate in our conduct. We have the PCAOB, the Public Company Accounting Oversight Board, that could sanction us, and they're dealing with mainly public company. And then we have the State Board of Accountancy in each respective state that could sanction us if we do not follow the rules. So to conclude, as aspiring CPA, it is extremely important that we start developing ourselves to be a highly ethical person. Let's start that now. Let's start using good ethical values in our everyday practice so that it will come as a habit rather than we have to check if we meet this or meet that. No, this is a profession you want to get into. You want to develop your character, your personality, along with your skills to go with that profession so that you will be a successful accountant 5 or 10 years from now. Okay. And that concludes my lecture. Any questions? I'm going to stop sharing so that we could have a discussion if anybody wants to. And if you're gonna ask the question, please turn your mic on.
So, Professor, question. So, let's say you're a CPA, right? And you actually do like tax returns, right? And the tax return that you did, like let's say the person doesn't even know what you're doing, but you know, like you see how you said like sometimes it could be illegal that you will do it, right?
Well, if you're doing something illegal,
But but my question is, what if you didn't know that what the tax preparer was doing was illegal?
well, if you're preparing tax return, you should know the tax law. You should know what's legal and what's not legal. If you don't know that, then you're not competent. You shouldn't be doing tax returns.
Well, I'm not talking about
Let me give you a situation that will
I'm not
clarify.
talking about like I'm not talking about the tax preparer. I'm talking about like, let's say I go to prepare my taxes, right? With a tax preparer. I did not know what he was doing was illegal until after.
Let me share something with you. When I moved to Florida, going back about 15 years ago, one of my clients referred a client who was having some problems. So he came into me and I reviewed his situation. And he told me that the FBI was calling his home. He got very scared and very nervous. And they are asking about 3 years of return that was prepared by a particular preparer. And in that return, when I look at the return, I know that they were fraudulent because they claim all kind of credit that this guy didn't have. So I asked him, "You have this?" He said, "No." "So why are you claiming the credit?" Now, if you go to a tax preparer and they prepare your return, guess who signed the return? You. So before you choose a tax preparer, you want to make sure that there's somebody competent and there's somebody ethical because you are ultimately responsible for that return.
Okay,
Now,
got
this
it.
client, he's responsible. Let me finish. He could go to jail. So I told him, I said, "Listen, this is the only thing I can do to help you. Let's correct this return. Let's amend these 3 returns to whatever it should be. Let's have you pay the taxes and then have the FBI call me." So I amend the return, I have him pay the taxes, have him write the check right there, and I give him my card to give to the FBI agent. Talk to them and give them my number. Tell them, "This is your accountant. You want them to talk to me." The FBI called me and we chat. And I said to the FBI, from my knowledge from dealing with the client and talking to him, I got the feeling that he didn't know what went on, that the preparers were perpetuating this fraud. Now, what happened? The mere fact that I did that for him, I took him off the hook. So instead of the FBI focusing on him, they were focusing on the preparers now. And they were using whatever we did as evidence that, well, this preparer did the return this fraudulent way. It was done by a CPA the correct way, and that was used as evidence. So if you go to a preparer and you don't know, right, you are signing that return, that you agreed to it. When you sign that return, you understand it. So you should not be signing a return that you do not agree to and you do not understand. So you want your preparer to explain to you. Now, this is what a lot of people do. They go to the preparer, they know what the preparer is doing. And then when the fire started, they claim they don't know. And I know that this guy probably knew what the preparer was doing. But when he gets in trouble, and guys, it's not fun when the FBI is calling your home. The IRS got people that do office audits. They got people that go out in the field and do audit. They got people that walk with weapons. They could put you in jail. Whenever there's a drug bust, right after that drug bust, guess who's coming? The IRS, the enforcement unit. Those guys are heavily loaded. Right? You don't want to get in trouble with the IRS. You want to do the right things. And as an accountant, you want to guide your client to do the right thing. As an individual who is not an accountant, when you go to get your taxes done, you want to make sure that that preparer is competent and is doing the right things. Now, if you go to Joe Blow have no standards. But if you go to a CPA, they have all these guidance that they have to do the right thing. Do you think I'm going to try to cheat on your tax return that I'm charging $200 to put my career on the line? No, that's not going to happen. So the IRS issue guidelines on how to select an appropriate tax preparer. The accountants issue guidelines on things to look for a good tax preparer. You as a consumer need to follow these guidelines. And if you don't, you cannot blame the tax preparer that they do it. No, you're equally culpable. And I'm happy for your question because it's an important question. I'm sure a lot of people have similar questions. A lot of people who are not taking my class have that question. How do I select a tax preparer? You want to make sure that if you're selecting a tax preparer, that they have certain credentials and that they are reporting to somebody that oversees them. If nobody oversees you, you do whatever you want. And there are some preparers that do that. There are some preparers that and I know some of them, okay, that feast on the people that either are greedy or did not take the time to select the appropriate preparer. They give them this big refund and then they get in trouble. And then they come back to an accountant to help you solve that problem. Now, when you get in trouble, it now becomes a big problem to solve and it becomes very costly. If you're paying $100 or $200 to do that return, you get the IRS breathing down your back, it becomes $2,000 to clear the problem or more. So it's important to choose not only in accounting. If you have a medical problem, who do you go to? You go to a doctor, somebody who has an MD, right? Why? Because you think your health is important. Likewise, your financial health is equally important. Because if you don't have proper financial health, guess what happens? You're going to end up in the doctor's office. You're going to get stressed, right? This guy was getting so stressful. He couldn't sleep at night. If he didn't run into me, he would have eventually ended up in the hospital. So always, whenever you're selecting a financial professional, make sure that you're selecting a professional who follow the guidelines of that profession. And not only accounting, in all financial aspects. You're going to get a mortgage, same thing apply. In New York, they used to do a fictitious W-2 with 40 guys on Liberty Avenue. You went to jail for that a few years ago. You don't want to deal with these situations. Okay? And you want to develop your professional life that you'll avoid these pitfalls. Make it a habit to do the right things. Make it a habit if you're looking for something. Think of this: if you go to buy apples in the store, you look for the best. You look for the shining one. You look for the one that display appropriately. Does it mean it's the most delicious one? Not necessarily. But it got some of the credentials. You find out that these apples generally taste better, right? Likewise, when you're looking for a professional, you look for a professional that have these credentials. Okay. That is reporting, that is oversight by another professional body to make sure that you're doing the right things. Did I answer your question?
Yes, thank you.
Any other questions?
Yes, Professor.
Yeah.
Yeah, my question is, you had mentioned, I think like 2 classes ago, it doesn't matter if you take the 150 credits in order to take the CPA exam, as long as you just have 150 credits. Is that accurate?
Yeah. Well, it depends on the state you're in.
Okay.
Those are governed by state law, but my take on that is that you should, if you're gonna be a CPA, you should do the master's degree, because you get not only a bachelor's, you get an advanced degree. You're more marketable. Anywhere you go in the world, you with a master's degree, you're much more marketable than somebody with a bachelor of 150. If you do 150 credit at the undergraduate level and you don't pass the CPA exam, all you have is a bachelor's degree. But if you do a master's degree and don't pass the exam, guess what? You have a master's degree. And if you do a master's degree, your chance of passing the exam will be much higher.
Okay.
Most people that are successful at that exam on the first time, they did that master's program.
Okay. Thank you.
Any other questions? All right, if no questions, should we close? So we will get back together again on Tuesday. I did send out an email and post it on the announcement page of what your schedule is from now until the next exam. So please follow that through. We're going to do chapter 4, chapter 5, chapter 6, and chapter 7. Then we'll have our second exam of those 4 chapters. Okay. And that will take us through April. And then I'll post
Professor,
the rest of go ahead, Tisha.
how can we see your grades on the first
I'm gonna
exam?
open it up that you'll see your grade. Between now and next week, you'll see your grade. Okay. I'll probably
Okay,
open
thank
it up later today so you see your grades. Okay. Any other questions? I know the grade is primary on your mind. Thank you for asking that question because I know that's probably on everybody's mind. Okay, so I'm gonna open the exam up so that you could go in and see what grade you got.
Okay, thank you.
You're welcome. Trishana, you're asking a lot of the important questions, you and Scott, that is on everybody's mind here, not just you guys. So thank you for doing that. Okay.
No
All
problem.
right. So we'll close there.
No problem.
All right. And I'll talk to you guys on Tuesday. Have a wonderful weekend. Hope the weather is nice in New York so that you could enjoy yourself a little. Take care, guys. Love you all.